Okay, we're live. We're live on Zoom and YouTube as well, so I think we can start. Welcome everyone. Thank you for joining us today. I'm Kate Rutkovskaya, Chief Revenue Officer at Your Bourse, a brokerage infrastructure technology built for modern brokers. We work with multi-asset brokers and prop firms across the globe, providing the connectivity, execution, and risk technology that makes products like 24/7 commodities, synthetic indices, and even prediction markets operationally viable. So the topic of today's webinar isn't just theoretical for us, it's very much what our clients are operating on. And we're going to be diving today into one of the most significant shifts happening in the CFD space right now, the move to 24/7 trading. We've seen major players like IG roll out 24/7 FX and CFD, alongside the 24/5 equities. And just a few days ago, Plus 500 announced the launch of their prediction markets offering. So things are happening. A lot of brokers are moving to this 24/7 products, and we want to understand how this works. Markets don't sleep anymore. And we want to understand how brokers who want to offer this round-the-clock access, how do they do it exactly? What it costs them operationally? What do they need to take care of from the infrastructure standpoint? And what it actually means for their clients? So we are here today to discuss the practical side of things. So I'm delighted to have these three operators with us today who are living this challenge from very different angles, and that makes this webinar even more interesting. We have George Neophytou here, the head of global sales at FXPRIMUS, offering 24/7 access through synthetic indices, products built specifically for always-on markets. George, welcome and thanks for joining us.
Thank you so much for having me. Hello, everybody.
Wonderful.
And hello to your audience.
Right. We have Andrey Stoychev, CEO and managing partner at VS Capital, who are running 24/7 metals and commodities CFDs. And Andrey will tell us more about this today as well. Welcome, Andrey.
Hello. Thank you for having me as well. Really nice to see you, all of you, and excited about what we are going to discuss in the next hour.
Yeah, always a pleasure. And we have Yong from Wintermute, operating at the frontier of the continuous markets through crypto and prediction markets, where 24/7 is not news, but is the foundation. So thank you so much for joining us as well today.
Yeah, thank you so much for having me.
Wonderful. So as we go through this discussion, please feel free to send us your questions. I'm talking to you guys, everyone who's watching us on live stream on YouTube or Zoom. Send us your questions to this Q&A window that you can see, I think, on the side panel somewhere. And we will address them either as we go through the questions or at the end, we'll have a separate Q&A section. So let's get into it. I would like to start with a question to everyone on the panel. I would like to understand what was that moment, or the trigger rather, that made you decide to introduce these new products that you're now offering, respectively, that's the 24/7 commodities or indices, the synthetics, prediction markets, etc. So for each one of you, what was that moment when you decided, okay, this is the time we need to start offering this 24/7 products? Andrey, how about you start?
Well, thank you for giving me a chance to explain in general our idea. Historically, we started from the very beginning offering 24/7 crypto CFDs, which back in the days was not really something very common in the FX world. And it was actually our first step and test for us to see how we will organize ourselves in terms of infrastructure and in terms of operational, from operational side point of view, to organize this offer. Obviously, we did pretty well. Of course, fix some mistakes or some small things down the road, but in general was very successful. So that's why it was very logical after that to start offering and to work on offering all the other assets 24/7. Why we start this? Because once the crypto world enter in the financial world, basically, all the players who were historically trading crypto, it was natural for them to trade 24/7. And if you want to compete and if you want to offer the same level of services to all the retail and institutional players, we must be 24/7. So that's why it was our mission from the very beginning to start offering as much as possible assets 24/7. On top of this, as you can see, even stocks these days, some of the stocks can be traded 24/7, which is our goal as well. So our shift, let's say, was from the day one of building our company.
Okay, so it has always been the strategic kind of part of the strategic plan that you've had. Okay, very forward thinking. Thank you. George, how about you guys? I know that you are offering something quite unique. Maybe you could shed a little bit of light on what those synthetic indices are and why you decided to start offering that.
Yeah, so before I explain what they are, I think ours is a bit different to Andrey's experience. It was something that basically the main trigger for us was very simple. I think it was just directly we realized that the clients were actually requested a change before we actually made the change. I think specifically, I'll remember it as a very clear moment. A client calling us, basically, a client was actually funded from one of our largest partners, calls me in the afternoon on a Saturday, and he was asking me what I can trade. And I'm there sitting there thinking, well, he needs to wait another 36 hours. And that was it. Basically, we actually went and realized that we weren't missing a product. Essentially, we're actually voluntarily sending our clients, funded clients, engaged clients, to our competitors every single weekend. And like Andrey said, it's always been crypto up until now. So introducing synthetic indices wasn't simply about adding another instrument or about just trying to make something a bit more engaging with the client. It was actually very relevant to what the modern day client actually wants and how he behaves. So looking at my role within the company as well, I wasn't focused so much on the actual just looking at products. I was looking at the client behavior, and that's when we sat down with the company and we said, you know what, we need to sit down and find something that is actually very engaging for the client, and it's something that actually keeps them trading and it's actually moving with the times, moving with their actual behavior. Now, regarding synthetic indices, basically, synthetic indices are basically, imagine a traditional instrument like Euro USD or gold, where the price is set by a real buyer and a real seller. The price is also affected by banks, funds, traders, interest rates, external environments 24/7. So what we've done with synthetic indices is basically they're essentially completely different. It works. There's no underlying market. There's no market underneath. It's a cryptographically secure random number generator. That's the same technology, by the way, that banks use for encryption. That produces the price directly from there. So every tick, this algorithm will decide whether the price will move up or down, and it'll also decide by how much. That decision on how much is also how we've actually differentiated into our actual products, what we call the family of the actual synthetic indices. So essentially, you get a price, so there's a movement on every tick. And like our dynamic indices, as an example, is you've got, like, let's say, imagine a steady heartbeat. You've got a new price tick every second around the clock at a fixed level. So let's say dynamic 25, which you'll see the number there is a calm C. If you see dynamic 100, you're looking at a stormy one. You're looking at a lot of volatility. So unlike real markets, it never gets calmer or wilder, than what it's advertised. You know exactly what you're getting in terms of volatility and when it's going to move. We also have another family which we call basically our smash and boost, let's say, indices, which are the surprise indices we call, where basically the price moves calmly for a while. It's trendly. It's like you'll see a trend line, and then suddenly you'll see either a big crash or a big spike, and that will depend on how many ticks. So we have, let's say, the smash 500, which the price will actually be generated. The big crash will be generated every 500 ticks. Whilst when you're trading, let's say the smash 1000, you'll see that every 1000 ticks. So they're catered for everyone and every type of trader as well, because we do have some synthetic indices that will actually fill in the smaller less volatility for the client. But in general, there is no disruption, there's no slippage, there's no central bank surprising. It's 24/7, and that's essentially, in a nutshell, what a client can trade.
Thank you. That's interesting. We're going to get back to the topic of how these synthetic indices are actually priced and how this works. I can see Andrey is preparing questions. I know that smile. I know that smile.
Yeah.
Keep those in mind. I wanted to also ask Zio, how did you guys? So you recently introduced prediction markets, which basically alongside your more traditional crypto offering. How did that happen?
Oh yeah. Thanks for the question. And yeah, just for context, for Wintermute, who are we? Well, we are a crypto native high frequency trading firm. So essentially, if you don't know what that is, we buy and sell crypto pretty quickly on centralized and decentralized exchanges. And yeah, we don't just price spot. We don't just price spot, futures, perps. We also price options. So in terms of our capabilities, essentially, prediction markets, what are those? If underlying is actually like binary options. So in fact, we are really able to price options for BTC, Ethereum, all the different crypto. It was like a natural step for us to eventually price those on the poly market or like Kalshis of the world. And yeah, I think at the end of the day, it's like internal push as well, is that we are already pretty much very well set up to trade 24/7 since we are crypto native. And obviously we have ambitions beyond crypto as well, which is why at the end of the day, it was pretty much a no-brainer for us to eventually go towards that direction. Yeah.
Okay, thank you. We're also going to talk more about the prediction markets as the product and what it entails in just a little bit. Andrey, going back to your case, so you mentioned that you are already offering 24/7 commodities trading gold, and you're planning to also introduce indices and stocks eventually.
We are happy to do training as well if it's needed.
That's probably going to be needed. Yeah. So let's do a little bit of training now. Train us on how does it actually work? Where does your pricing come from, and how do you handle this whole weekend pricing and Sunday open gap? How do you do it?
Yeah, it's a very good question, and it's actually a question which we are facing all the time, how we are organizing our pricing and execution and everything. Actually, this is my question also to George to explain a little bit more, because it was very interesting for me to understand. I'm coming from the risk part of the business, so for me this is the main thing. So for us, obviously we were monitoring many, I would say not months but maybe years, how, let's say, IG were doing this, because they were one of the first who start offering this, let's say, TradFi instruments 24/7. Okay, they are quoting them only during the weekend, and then they convert in the normal instruments. We are doing slightly different, but at the end of the day, the result is the same. So we were studying this, and obviously we were checking with some market makers who are happy to engage in this activity, let's say, who are happy to pricing, to give us pricing and obviously execution based on the many components. One obviously is the underlying market, where it's possible to be checked, and where it's possible to check the demand of the buying and selling. Also based on the fundamental things, based on the activities in the world. So it was somehow natural to build this using two main market makers making the pricing, and also having like benchmark several other providers. So this combination we start using to create our own pricing, and for now it looks very, very stable, very logical. Of course, during the weekends, because of the low volatility, and the spreads are different, the leverage is different, from this perspective, these things are very important for me to be on the safe side. And also we need to be sure that all the time we can STP every order which we are receiving, so not to take additional risk or something like this. So based on all these aspects, we create our product and our few for now products which are 24/7. currently working, as I mentioned, to extend this to add indexes as well. And for sure, after the summer, we will add stock trading 24/7. But for stock trading, it will be much easier because there are many broker dealers already who start offering this, so we can use this liquidity basically for free, not for free, but it's already there, it's ready. So it's not needed to spend a lot of time to invent something new. So yeah, basically that's it. This is how we are doing the pricing. Of course, we implement, and this was one of our main milestone, let's say, this year. We implement AI agent, which is specifically for this part of our business, and it's specifically built and developed for our needs. So we are not using like this, Chat GPT or something like this. We create our own AI. We call it AI risk agent. For now, who or whatever, who is actually taking care for all the small things, monitoring constantly the pricing, execution, deviations, client behavior, and all these tricky risk things during the weekend. So in this way, we somehow compensate the weekend work for our team. So our team actually is not so overloaded during the weekend.
Okay, so if I heard correctly, you practically do not hold any risk. You just STP in most of the flow. If that's correct.
Most of the flow, yes. The risk which we can take usually is while we are receiving orders for buying and selling, let's say, and we can match the orders. But the rest we just STP for now.
Okay, and how popular is this? Do you see a lot of activity during the weekend, or is it for now more of a marketing tool rather than actual trading?
To be honest, for us, initially the idea was to prevent mainly our retail clients for big gaps during the weekend, because we are constantly, as George mentioned, we are constantly receiving, especially between February and April, was very tricky moment for the gold and silver and oil because of the conflict in Middle East. So we were constantly receiving some questions about, okay, but what will be the gap? Can we put a credit in my account? Can you keep our positions open, etc., etc.? So once we implement this, we directly at least stop this request, because all of the people start monitoring the prices directly from the platform. So it was very easy for them.
Right.
So this was actually one of the reasons. So to give our clients opportunity even to hedge, to close, to predict, or to take care for their accounts based on the pricing during the weekend. And the other reason, obviously, is the marketing, because offering this to our retail and institutional clients, giving us an edge where we can obviously offer directly to the retail clients or to our institutional clients, who can take the advantage and to offer to their retail clients. So basically that's it. The volumes nowadays are not crazy, let's say, in our books, mainly because of the leverage, because the leverage is a little bit higher, so it's obviously logical. We are working on this to, let's say, to reduce the leverage of retail, but at the end of the day, this is for now for us working mainly for the marketing. I think for our institutional clients also, this can be, as they start offering 24/7 using our pricing for crypto, they start doing marketing campaigns for this. I'm pretty sure that they are going to do this for the rest of the instruments.
Okay, thank you. George, let's talk about the synthetic indices and how that is actually constructed. So you explained a bit about the price generation, and thank you for that. Do you see also a lot of interest from the client side? So you mentioned it also was driven by the client's request initially. Do you see a lot of people actually trading this during the week or the weekends? So from your perspective, what it looks like?
I see a lot of movement. We've seen an incredible amount of movement, especially on the trading activity, because first of all, it's something new to a lot of clients. So it's something that's very intriguing as a first step. And this is why we are we're trying to boost a lot of the education part of actually synthetic indices. People have to actually understand how it works, because unlike trading like in real market environments, where you actually, you're creating your own strategy based on economic events and, the outside factors. Here, you're actually basing your strategy based on the actual algorithm itself, on the way the actual asset moves and the way it actually performs. So we've seen a huge increase of clients coming in, especially new clients, people that are actually new to the market, and that's been the actual trigger that actually made us, pursue synthetic indices even more, because we were expecting clients to come in that are actually trading already, coming and asking, "Oh, what's this new product?" And we realized it's not just another product that you put on your MT5. It's essentially something that people are actually coming to actually trade and try as new traders. Why? Because like Andrey said very correctly, and Yong, the crypto market has actually changed the client behavior in general. People are not looking, they get apps, they have social media every day. So news is not stopping on the weekends. The news on your Twitter accounts actually are like 50 times more active on the weekends, and people are actually engaging with it more. So when they try and log in and try and see your platform and see what's available for them to trade, by not having anything outside of crypto, which again, crypto is it's a very balanced subject. People, we've found a lot of clients that prefer to trade actually physical, the physical crypto, go to the actual exchange and buy and sell rather than trade the CFD. We find some other clients that are preferring the CFD. So what we decided, we said, once we're seeing these numbers and the increase that we've seen, that's been very rapid, especially from partners of ours, that has been very intriguing for them. We've seen a huge influx of partners that actually brought in new clients that only want to trade synthetics. So synthetic indices is not something that's completely new in the market. It's been in the market for a long time. This hasn't been utilized. So there are people who have actually seen that. So answer your question very straightforward. We've seen a very big flux of clients coming in, especially new ones.
Thank you. Andrey, you had some questions regarding synthetics, whether about the price formation or the client side. What is it?
Yeah, actually, it's more, let's say, risk-related question. So I'm not sure if Josh can tell me, but yeah, I know that you're from the sales part of the team, but still for me, it's very interesting to understand how you're managing the risk, where, if possible, you offset, let's say, your positions. Because I'm pretty sure most of the audience will have the same question. Because at the end of the day, if let's say someone is taking your pricing and liquidity, then they need to offset the risk. They need to be sure that you're not hurting anyone. So this is very important question, I would say.
So what I know, Andrey, is everything's with us. Everything's with us, essentially. So when we're offering it through Your Bourse as well, you're getting the fee and you're getting everything. So everything that you see basically around the synthetic indices is around us, because there isn't an underlying asset below. And there's also a very low risk of toxic flow affecting you.
You are taking basically the risk based on the approach that it's a really synthetic product where the toxic flow is limited and you can manage the risk because of this.
Exactly, because there isn't any other market to counter it. You understand? The algorithm is completely random. So the pricing, especially when it comes to toxic flow, there's very, very difficult for someone to actually counter the pricing of what you have, because you don't have anything else to counter it with. So it's very straightforward, and this is one of the reasons why our collaboration with Your Bourse has been very, I think, fruitful already, because the integration is very straightforward. The risk is very straightforward, from what I understand. For more information, like deeper into the actual risk management, I'm not the right person to give you that information. I'm not going to pretend to be a quantitative analyst, but I am from the sales perspective, like you said. But from what I would say,
that makes sense.
We do take all of the risk, essentially, and we do actually allow our clients and the brokerage to actually be very flexible on how they want to integrate the product and how they want to manage their risk as well.
Okay, thank you.
Yeah.
Thank you. I'm having additional question, but maybe it's for your risk guys. So maybe at the next conference, I will make sure to organize a meeting.
We'll go deeper.
Yeah, exactly.
We'll go deeper on the risk side for the brokers. From what I can also tell from the Your Bourse side, we partnered with FXPRIMUS, just launched this just a couple of weeks ago, and interest from the brokers side has been tremendous, honestly. And I also, as far as I understand, George, this is specifically popular in some regions in Africa and Asia, as far as I understand. So there is a specific niche of audience that is highly interested in this particular instrument, which honestly, from my personal perspective, when I first heard about it, I was also quite skeptical, like, how does this work exactly? And I was asking a lot of questions to George when we just started talking about it. But then I saw the real interest, and we are in the markets, we go where the clients are leading us to. So we do see that interest, and it's tremendous.
Yes, I mean, the thing is, like you said, very quick, like imagine us when we're looking deeper into synthetics, there was a surprise and a smile every time we started finding out something more about it, because it's something that's very, very new. It's very, very new to a lot of people. And like you said, it's not, I wouldn't say a niche market. I would say it's been mostly, it's been traded for a while back in these regions. In Africa and LATAM, specifically, very big traders on synthetic indices. We were actually getting a lot of requests about 2 years ago from certain clients from these regions asking our support team, like, do you have synthetic indices? And that raised, like, we had no idea what it was. But when we started deeping into it, we realized that especially LATAM and Africa, and especially what you would say the regions that you would say are more as a brokerage, you expect lower FTDs, like lower deposits to coming in from a sales perspective, like $0 to $500. These regions actually prefer synthetics, from what we realize, especially from our existing clients. Why? Number one, the leverage they can utilize with synthetics is much higher than what they will be able to do on a normal CFD, the effective leverage. Two, it's something very new for them that they're in. A lot of them have already been in the actual, in the actual market, the real market as well. So they are looking for something different, but something they can relate to on their MT5 or MT4. But I would say the biggest differentiator has been for these regions that they actually like trading in later hours. This is the main thing, the later hours and the weekends. And I'm sure Andrey, I can see his smile, and Yong would actually agree with me that you realize this very quickly of whatever product you're giving out 24/7. You would see that you'll unearth things that you never knew were there in your database as a brokerage, and you'll start seeing that the times of the trades and the actual peak of volume is usually in later hours. And this is basically leading us to the broad discussion that we have here with everyone about the operational side, which requires a lot of restructuring, but not restructuring in a bad way, but restructuring that needs thought, that you need to go through, and that's something that we can elaborate with the panel. But the operational side to actually sustain these regions and on these hours is very important, on the later hours especially.
Okay, great. Actually, thank you.
Yeah, sorry, just to add here something that in terms of operational and side, as George mentioned really correctly, actually this restructuring and these upgrades, let's say, are for good, because you improve your service, you improve your capacity, you improve your speed, and all these components after that they are available for the clients not only during the 24/7, the weekend or the late hours or whatever. It's available 24/7. So you improve your services directly while you're improving your infrastructure and operations to facilitate these additional hours of trading.
Yeah, we're also going to come back to this, because I think that's one of the most important parts from the operational side of things, what it entails. Moving now to the prediction markets. So can you please elaborate a little bit on the instrument itself, the product itself, what it is, how it's constructed, how it works? Because I think, again, a lot of people in the CFD industry associate prediction markets with binary options, which is by essence what it is. But we know that this time around, we saw the big boom of binary options, what was it, 10, 15 years ago. It didn't really fly. We all know how it ended, but this time around seems to be very, very different. So could you please elaborate a little bit on what these contracts are, how they actually work, and what CFD brokers need to know about them if they want to start offering them?
Yep, for sure. So prediction markets, how would one understand that? I think it's basically a marketplace where people can trade their opinions, right? So example markets could be, for example, would Bitcoin's price be above 50,000 in a day? or would it be above 100,000 a day? Or on a more relevant note, would France win the World Cup? Yes or no? Right. So in this case, in the industry right now, there are more popular prediction markets such as Kalshi, Polymarket, and then I think Binance, even Binance, the largest Web3 exchange, has its own sort of variant, which is called Predict.fun. And for Wintermute, what we have been doing is that actually from the start of this year, we've started to trade on these markets, but primarily on the crypto market. So Bitcoin up, down, ETH up, down, and in the future, hopefully we can be able to price sports and even like GPU markets as we would like. How is it different to traditional derivatives, say linear CFDs? I think the very key thing would be the payoff. In the case of just using Bitcoin as an example, right? If you were to long a Bitcoin CFD at say 50,000 and Bitcoin goes up $1, effectively your CFD P&L would be $1, or basing on your average or return equity could be return on equity could be higher. But if you were to buy a Bitcoin prediction markets contract, would it be above 50K and expires above 50K, and you're long that, then effectively if you were long at 50 cents, you essentially doubled your money. On the other hand, if you were to short you were long CFD, and then but the price of Bitcoin actually went lower, say $100, then you have essentially linearly lost $100. But if you were long the same contract on prediction markets, then you have lost whatever you have bought. So that's a very key thing, and I think that's one thing that users, be it retail or institutional, need to understand. The payoff is very, very different. And yeah, I think coming back to the topic of this webinar was why is this relevant to like 24/7 trading, right? I mean, 24/7 trading itself is really about being accessible. And I think prediction markets, as you rightly pointed out, is really a more accessible version of like binaries. It's simple to understand, easy to understand. It's basically yes or no. If you think an outcome is going to happen, you buy. If you don't think it's going to happen, you sell, right? And I think beyond that, don't just take my word for it. Even brokerages has begun to start offering. I think at the start of the call, you mentioned Plus 500 has been doing that. Interactive brokers, Webull, Moomoo, I think they have all been starting to integrate Kalshi into their systems as well. And yeah, to be honest, in due time, I don't see this as a direct competitor or in fact alternative to CFDs. I think each has its own users. But I wouldn't be surprised if every single brokerage firm out there would have some form of prediction market component to it in the future. Yeah.
Thank you. Thank you very much. I also wanted to add here, Andrey, did you have a question? I see you're preparing.
Yeah. Yes, I have a question. Because
my question... Yeah, so my question was more on the operational side of things, and it will be to all of you. But if you have a question about prediction markets, go ahead.
Yes, I do, because prediction markets is very, very interesting topic. On top of this, during the FX now in Cyprus, we were discussing many, many times about the prediction markets, and I was checking prediction markets in general. It was 1 year ago or something, and it was really, I mean, it's, let's say, for operational side of view, point of view, and liquidity point of view, I think it's not so complicated. But from legal point of view, it's very complicated, especially because it sounds like totally like binary option product, which obviously, the binary option history. Unfortunately, I'm more than 20 years in this industry, and I know a lot of things during all these years. And binary options at some point were very, flagged like a scam or some dodgy things. And most of the regulators were like this when they hear something about the binary options. In Europe, they are totally, of course, forbidden. For some markets are available somehow. So my question is actually how we can offer this legally, and how Wintermute, for example, offer this legally to which markets? Because I'm pretty sure to offer this actively in Europe is one thing, in Asia is another thing. So this is very interesting for me. Also, Middle East, I'm not sure how they consider these prediction markets there. So it will be great if we can discuss about this.
On that, right? I think on our side, we do not actually offer prediction markets like sort of trading to our counterparties. I think we are primarily as a trading firm. We are trading on the books.
Oh,
So
you're doing like the normal crypto market making activities.
Essentially would be like if you were to go up to Polymarket or Kalshi and think that you want to buy Bitcoin will be going up, for example, then there's a good chance that you'll be trading against us as a counterparty on the exchange. But we primarily right now at this point do not offer bilateral kind of setup as much as we still see binaries as part of like is the agreement. So we do, if we have certain counterparties, for example, if VS Capital, if we sign an ISDA, we could structure something bespoke, interestingly, in terms of binary payoffs. But we do not offer, obviously, we don't face retail users as well. So at this point, on the compliance and regulatory side of things, we've been erring on the careful side. But from a case of pricing and actually trading it as an instrument, we are trading it as pretty much as any other user on the exchanges. And we do it in a more like a systematic and also a high frequency manner. Yeah.
I see. Okay, thank you for this.
I think I can comment on this one actually as well, because we are facing this, because we have the trade server, which is the trading platform backend, which is multi-asset, and we are now also supporting or adding the support for prediction markets there, so that clients could offer this on their own front ends, on other front ends, right? TradingView, who are also just about to launch prediction markets there. So we speak with those brokers, and they're all concerned about obviously the regulation side of things. If we're talking about the US clients, the CFTC is, providing full support, so that's fully regulated there. That's all clear. But when we are talking about other jurisdictions, obviously offshore licenses probably either do not really look at it for now, or have this under certain provisions. But if we're talking obviously about FCA, which is totally against it, officially banned. Europe is not so sure about it for now, as far as I understand as well. So I think it's still kind of this gray zone, which regulators will have to figure out which way they're gonna go. Speaking of Middle East, I was just talking to one of our clients in the Middle East the other day. They're also yet to see what's gonna happen. They don't know where this is gonna go. So that's kind of, there was a lot of uncertainty in this regard, but I think something is going to happen. I mean, as we discussed with Andrey as well, that regulators will have to follow one way or the other. We see more support than we had with binary options, I think, already, which is, I hope, positive. But yeah, we're still to see. Okay, well, I see we're having some questions in the chat. We will pick them up, definitely pick them up at the end of it when we go through all our questions. So I have a couple more questions. So, Andrey, coming back to what you were talking about in terms of the operational challenges, and this is a question to everyone. From the broker perspective, imagine I'm a CFD broker, retail broker who wants to start offering 24/7, whether that's gold, commodities, 24/5 stocks, or synthetic indices. What do I need to think of operationally? What will have to change, or what challenges I will have if I want to do that?
Well, my first question from my sysadmins guys were back in the days were, okay, when we are going to update our servers and when we are going to do the Windows updates, this was their first question, yeah. So this maintenance obviously was one of the first things which we took care. Actually, the solution was very easy, and it's most of the brokerage companies, I'm pretty sure they're having this currently. Just we have two main, let's say, servers, one main and one as a backup, but still the same capacity and everything. And whenever we want to update one, we just switch to the other one and vice versa. So we keep up and running 24/7. This was done back in the days when we started offering obviously 24/7 crypto. And now we are using the same technology for the rest of the instruments. But yeah, this is one of the things. I know that some of the systems from the brokerage side are not actually set to work 24/7. They have some reconciliations. There comes some other operations on the back end where they need like a break or something, which I think it's just a matter of operational change than something else. So I don't think that this is a big deal. But for some brokerage companies, even for bigger one, I know that this is the case as well. And obviously, the other thing is the support and the monitoring of all the activities and all the client needs and activities. This is obviously you need to solve with put additional people or somehow to rotate the people in a good way, which is the tricky part. But thank God we are having now these AI options, which we are now heavily working on, and we start resolving most of the problems directly with the AI without human intervention. Still, in terms of support and in terms of email communication with the clients, we are using human touch, let's say, because we want to be really close to our clients. Never mind if it's a big one or if it's a small retail client. For us, is the same for now. So I would say these were the main challenging things. Of course, in the beginning was it's hard to when you are Saturday afternoon at the football game. It's hard to understand that from time to time you need to check the market or something. But we switch quickly on this, so nowadays it's not a problem. But this is also something which you mentally need to change,
Yeah, so the main challenge is that you do not switch off anymore, even on the weekend.
For me, was very natural, so I'm happy about this.
Yeah. Okay. Yeah, Zero?
Yeah. I wanted to add on Andrey's first point. Essentially, is maintenance, right? Because for ourselves as liquidity providers, we do obviously provide liquidity to many different brokerages, and honestly, the most practical sort of setup the brokerages could have is just to have more than one liquidity source, such that for example, even for ourselves, we do have like scheduled maintenance, say on Sunday, a 1 hour window. So during that time, maybe there are other LPs to cover, and likewise, if there are like 2 or 3, then generally you can actually continue that 24/7 operation. Another point I want to bring up is that this is more something that TradFi sort of like brokerages counterparties do not usually expect is in terms of margining over weekend. Most of us have been dealing with like banking rails, right? So US bank, we need money, I send to you using my bank to your bank, right? In the case of a weekend trading, let's say the market is very volatile. At some point, maybe VS Capital is holding a certain position with us, and then there is some margin requirement, right? And then you want to top it up, but then you can't do it because the banks are closed. So there are 2 ways to go about doing this, because obviously we do face a lot of brokerages with such requirements. Most of the time, because we don't have auto liquidation, so definitely we have the margin call, but usually most of the time we understand and have the margin call only actually happen.
You are taking a risk on this side, right? You are taking a risk.
Correct. So that's one point. Second point is, in fact, we are able to accept like stable coins, Bitcoin as collateral as well. So in this case, from a brokerage point of view, maybe a question to ask would be, are you okay to accept crypto or like stable coins as collateral? And that's one. Second thing would be, would you be able to send crypto as collateral to your liquidity providers? So I think these are the core sort of like, otherwise, right, you could just have more prudent margin requirements in general for your clients, so that you won't there's a lesser chance for you to face these situations over the weekend. Yeah.
Very good point. Thank you, Joe. That's really important. And I think, as you mentioned, same applies to the institutional and retail business. So you need to check both sides. Always make sure that the topping up will run smoothly during the weekend too. Andrey, how did you solve that problem, by the way, for your clients? Are you accepting crypto?
Well, we do. We accept crypto for top of the accounts, and also we can. I mean, obviously, we are not going to see the bank transfer in our account, but we can see the proof of deposit or whatever. So the statement from the client account. So for us, this is more than enough to accept the money, especially during the weekend, and to keep if margin call or something like this is happening, to keep the position open. Obviously, with some institutional clients, we're having more deep, let's say, agreements. We have some credit lines. We have some, tolerances. Wintermute as well, I guess. So it's case by case, depends of the size of the client and depends of the needs. But basically, crypto and bank transfer, like a proof for the money, it's more than enough to keep the accounts in a good shape.
Understood. George, and what about you from the synthetic indices perspective?
Yeah.
Is it the same? Do you see the same things?
Completely different. Completely different outlay, because obviously there is no LP to pass it through. So when it comes to liquidity, let's say on the weekends, from an operational standpoint, it's very straightforward. But like I always say, I think the weekend, from my experience, won't suddenly create any bad risk management. It will expose weak risk management faster. So you need to be prepared and make sure that whatever you're internalizing, you're hedging, or whatever you're doing in terms of as a broker, you have clear limits. You're monitoring constantly, regularly. You have disciplined decision making, and like we always say, like innovation and putting a product should never come at the expense of the risk governance, the actual broker. So when it comes now to like some events that will happen, like we said, it's not connected to real market environments. There's no external environments that can affect us. However, and this applies to everyone. It's like, like Andrey said, and even Yong, like, clients don't tolerate inconsistency and surprises. They like to keep the market as smooth as possible, especially on the weekends. If it's behaving differently than what they're expected, they're not happy. So transparency matters a lot to your clients, even if you are operationally not ready yet. Being able to transparently state to the clients that you should, and giving the communication to them is very important on the organizational structure. So from our perspective, the organizational structure on the weekend is not to do so much on the trading aspect. It's more to do with your customer support, your back office, your onboarding, your dealing desk, your website, your FAQs, your client education, things that are more relevant to the client. I would say operationally, a very big shift would also be on the for the brokers that are working, that are interested more in partnerships and are working mostly with partnerships. I would say the biggest shift would be also designing and making sure that the actual rebates or incentives you're giving your partners are they're compatible with the synthetic indices, because of the leverage and because of the pricing, and because it's not controlled, and it's random. You should be prepared for an asset to one day start off, let's say, for example, at, let's say, a price of $1,000, let's say, on an asset, but it can reach 300,000 within 3 months. There is no measurement, or there is no control over that. So the main thing from our side operationally would be not so much the actual liquidity, but it would be the technology side, the operational, the actual in-house facilities that you're offering to your clients.
Understood. Thank you. Great. We have some questions on the chat I would like to address. Some tricky ones. I think, George, some of them are addressed to you directly. Probably we could comment on that. I think the first one was from Uchenna. He took some quote from the FXPRIMUS site: inherently volatile, maybe modified or discontinued at the provider's discretion, taken from FXPRIMUS site. For me, smash boost loss looks less like market access, more like a house-designed game. The provider creates the price, controls the volatility, and takes the other side.
I'd like to thank you, Uchenna, first of all, for the question, because it's very easy to see this very simplistically and say, it's an asset. They control the asset internally, and and that's it. That's how it works. Obviously, we wouldn't be able to, and we would never risk a brokerage of 15 years putting such an asset onto our product, and actually even promoting such a product from the get-go. So when you're looking at the risk disclaimer of an asset that it can be discontinued, yes, we can discontinue the service, but not the pricing, not alter the pricing or change the pricing in terms of how it runs. And this is something that I'll very simply say to Uchenna, the most straightforward way of actually verifying this is actually to check the ticks. If you know how to download and you actually look at the ticks and what you're getting on your asset, you will see that they're compatible to the actual description of the asset itself. So it's never going to go outside of that description. And if it does go outside of that description, that means that we have a very serious issue that we that we need to address, because it's not something we can actually control, and it's not something we want to control. It doesn't work like that with synthetic indices. It's not like you're trying to manipulate a price. So very valid concern, but I would say the easiest way to actually understand it is to try trading and actually download the ticks and see exactly that what you're getting, what you're being advertised, is what you're actually getting on the platform. So that would be my answer to Chenna's first question. But a very good question, and I thank you for the question and welcome more.
There is more from Chenna, so we'll get to it in a minute. One question from Samuel for Wintermute. Looking ahead 3 to 5 years, what capability do you think will separate the brokers that successfully transition to 24/7 markets from those that simply extend their trading hours? Good question.
Yep.
So, what do you
thanks for the
think?
question, Samuel. Yep, I think primarily two things. First thing would be, I would imagine for, let's say, for example, for on the Web3 side, Binance is always known as the largest, crypto sort of exchange, right? They, from providing crypto spot trading to crypto perps trading and then to options, and right now they are going towards the traditional finance instruments, right? Likewise, on the traditional finance side, Robinhood, they offer equities and everything. Right now, they're actually offering crypto and everything, right? So I think the very first thing for brokerage to win on a 24/7 basis is really being able to offer, at least most of the assets that users would want to trade. And this would primarily not just be equities, but also spot, but also options as well. Could be in the form of CFDs when users want to do leverage as well, or it could just be, logically spot. On the second point of view would be, once I buy that particular stock or like Bitcoin from on the platform, what can I do with it? Any use can I unlock? So to my second point would essentially be in terms of margining or in terms of like utility unlock on your positions in this brokerage, which typically is like 24/7. In the case of, let's say, Bitcoin, if you could lend, if you bought a Bitcoin and then you can lend it on platform and earn yield on it, you make your app stickier to use. Likewise, if you can use your Bitcoin as collateral for you to do a CFD trade that you want to do because you are long Nvidia for their earnings, for example, just for a few days. For you to be able to achieve that cross-margining sort of like setup and unlock utility cross asset, I think that's probably something that will make the brokerage a much more attractive one to use compared to just having being able to trade essentially at a later time or even over the weekend.
Thank you, Joe. We have another question. Yes.
I can also jump
Andrey?
quickly here because I was thinking about it's a very, very good question. And I'm thinking about this, that actually doing a proper risk management and managing your positions correctly, then this will help you to start offering even better conditions to your clients, and together with this to make more profit. Because obviously for risk, again, this is the very tricky part, this trading, which is out of the normal trading hours. So if you just STP or put a markup or whatever and taking the difference, I think long term will be very tricky to be competitive enough for the rest of the guys. But managing the risk in a proper way where you can, make some money based on, orders in both ways, matching orders or some taking a small risk based on your net positions and everything, then this can be a really good advantage for your brokerage company.
Great, thank you. Great, next question, actually again about prediction markets. Prediction markets are not inherently bad, but much of the excitement is financial language being applied to exchange style betting. If we are genuinely client safety led, why would a broker introduce them? So, a tricky question for you.
Yeah, this is a tricky one. I think on our side really is, we come into prediction markets thinking that it is a asset that I think we can price well and we could potentially make money on. In the case of offering, why would the broker introduce them? I think primarily would essentially just be volume as well. I think as with all financial like brokerage firms, if something trades well, typically, using sort of like just using like Polymarket or Kalshi example, if you log on and if you see that, oh, the World Cup is actually trading like hundreds of millions of volume, then likewise from a business point of view, you would just think that potentially you could introduce that into your app, right? Of course, with consideration to like the regulatory compliance point of view. I don't have an answer to how client safety it could be, but at the end of the day is there are little nuances between like betting versus prediction markets. One key difference is like the transparency in terms of the settlement and Oracle resolution rules. You can, before you place your sort of like orders, you can see very clearly how are the orders being sort of like how is this market going to be resolved based on which source of truth, based on which and at what time as well, and which third party Oracle are they using. So in a way, it's like you wouldn't feel like you're betting against the house, which brings my second point, which is when you actually trade on a prediction market, you are not trading against the house, not like in a betting site where you are basically buying or selling against the house. In this case, you're actually buying and selling against another user, and you can see very clearly in terms of the probability that you're going with or without. And I think to my last point as well would be most of this, when we say like Momo, Weibo, all these brokers, they are using, for example, Kalshi as their prediction market sort of like provider. Kalshi itself is actually heavily regulated by CFTC in the US as well. So on that note, they also have high standards to follow through in terms of making sure everything is fair. And yeah, at the end of the day, it's like we could try to do all this, safe, mitigate that safe to make sure it's safe for clients to trade. But at the end of the day, it's like, the clients themselves will still have to, essentially, when they place that order, they'll still be like largely their own responsibility to make sure that they know what they are doing. Yeah.
Yeah, I agree. I think it is just a little bit difficult for a lot of traditionally minded, let's say, brokers to accept the fact that the reality of the trading markets, of the markets in general, the trading behaviors and traders is changing. And they're looking for different things where safety in the old sense might not be the priority for them. Some just looking to have fun. Some come to the platform just to literally just blow some money. They're just, I don't know, passionate about sports, whatever, things like that. It is obvious that things are changing. And I understand where Chenna's questions are coming from for sure. And I think it's just kind of different worlds collide here. Andrey?
Yeah, I was also trying to say that as well.
Yeah,
right?
George.
I agree with you 100% on that, because I think, a lot of people on a brokerage, when we're talking about a brokerage at B2B level, right? And you're looking at it from a business perspective, I think everyone will be able to agree with me that the cost of new client acquisition with the competition that is out there right now is growing and at a significant pace. It's not something that's gradually growing. The cost is actually significant. And therefore for brokerages trying to introduce, I think there's a lot of discussion, and I understand Chenna's point, obviously, because this is exactly the type of client that we would actually welcome to actually try and educate and help understand the product. But at the end of the day, it may not be for Chenna, it may be for somebody else. Like you said, the issue is that people put a lot of emphasis on, is the product a gambling product or is a product a betting product, rather than actually looking at the actual the mentality of the client himself. I mean, you can gamble on Euro USD. You can, if you have that mentality and you're not careful, you're not putting in stop losses, and you're not actually even aware of the actual, you're not disciplined, you can gamble with any asset. I do understand Chenna's point exactly that, some brokers need to be careful of what assets you're actually introducing to your clients, and it should go through certain checks that you're not sacrificing their safety for, a product that can be utilized for gambling. But at the same time, something that not many people know outside of the actual brokerages themselves is that most products are actually added on due to demand, not the other way around. So clients are asking for these products before actual brokers actually are implementing, and not the other way around, in my view.
Andrey, I know you have something to add.
Yeah,
Don't be shy.
it's many things can be added here. Definitely, there are many people who are coming in the platform, just as you mentioned, to have fun or something, which is actually the main the main job for the regulator to prevent these guys to do exactly what you described. So from this perspective, that's why these products are very tricky for the high regulated countries, let's say, very, very tricky. And I'm a little bit skeptical of offering these products 100% legally in these regions. Of course, US is a different topic because they very wisely, let's say, accept these products as part of financial world somehow, regulated in their globally, let's say, in the whole states there. But still, US for most of the brokerage companies is a forbidden country, let's say. So for the rest of the world, it's still for me, it's having this gambling feeling put me in a not really comfort zone to work on these products.
Absolutely. And this is an official disclaimer. Please look into all the details, make your own decisions. We are not to any extent, we're not recommending or advising anything here. This is not a financial advice. We're simply observing these things happening in the market, as we mentioned multiple times today. The demand is there. We're seeing why it happens, where it originates from, and how brokers respond to it. And when they respond, how do they do this in the safest way possible? This is what this whole webinar is about. Safest from the operational perspective, from the legal perspective, from the client trust perspective as well, which is what Andrey mentioned. Like, if the broker is not comfortable offering those things, you absolutely shouldn't be doing this. But as George says, on the other hand, there are some brokers who are eagerly jumping into these new products, and there must be something that drives that for them.
Well, I can, yeah, exactly the same like the leverage. It depends which type of, what is your main target. Let's say if you are targeting clients who are just coming, doing some trades, gambling, let's say, or something like this with as high leverage as possible, then maybe it's a good thing. But this game is never ending. Attracting new clients constantly. There is another strategy where you are offering more, let's say, long-term products and long-term solutions, let's say, for your clients, which is obviously you generate money not so fast, but long-term maybe you generate more money. So it really depends on the philosophy of the brokerage company and exactly what again, it's a business, and all of us need to make money, but there is different ways to make money. And it's it's different and depends on the mindset of the broker.
Definitely agree with that. Okay, we'll take one question from the Q&A section from Vasily. Question on the 24/7 trading in traditional financial markets like metals, commodities, or oil preferably, and stock indices. How good liquidity is in those instruments over the weekend, and can we not just launch a new 24/7 gold contract but extend traditional spot gold trading hours? I think partially, Andrey, you explained that a little bit at the beginning, but if you can comment again, please.
Yeah. The liquidity is not great. Obviously, it's not like the normal spot trading during the week, but still, it's good enough to hedge yourself or to do some trades or to speculate even on the price. Depends, of course, of the size of the contracts which you want to execute. But definitely, it must be improved. But let's be honest, the crypto liquidity was really bad 5 years ago, and step by step it was improving because of, the demand, more players were entering, institutional guys, blah, blah, blah. And then liquidity now it's much better than what we were facing 5 years ago. The same is with this, let's say, new type of instruments which are trading during the weekend. The liquidity is not there yet, but it's coming because more market makers are going, like, I'm sure Wintermute are very active in this. More institutional guys start looking at this as a hedge opportunity, so just as a trading or speculation or whatever. So it's getting better and better. And that's why I share that we are working on, improving the leverage, improving the spread and all these things based on the liquidity which we are having.
Okay. Another question from a channel as well. How should firms distinguish between products that genuinely benefit from 24/7 access and products where continuous trading creates more operational risk than client value? Again, I think we touched upon this slightly, but if you have any advice on, obviously the 24/7 is happening, what you would recommend to start with, if anything? George, would you like to comment on this one?
Sorry, can I understand the question a bit clearly? So,
yeah. How should firms distinguish between products that genuinely benefit from 24/7 access and products where continuous trading creates more operational risk rather than client value?
Okay, I think, like I said, I think a product needs to pass specific phases, that obviously every brokerage needs to evaluate before offering its clients. And there are certain things that you need to look at. I would say number one would be the pricing around the clock. If you're offering 24/7, is it really 24/7? Is there interruptions between that 24/7? And what are those interruptions going to affect, how they're going to affect your client and its safety? So that's a very big, I think, a very big one for me. Like, for example, like Andrey said before, like when you're changing liquidity or, during the weekends, or you have spikes, or you have like macroeconomic events happening on a weekend, how well does the broker actually manage that? And what are the safeguards he has for the client in those periods? The second one, I would say, you also need to look at pricing, margin calls, liquidations, everything that affects a client, and in any aspect, like from the actual engine, like where's your LP, how are you getting your pricing, how long have you worked with them, and can that product you have a good marriage with the client at that time? Because if it doesn't, you need to definitely kick it out. And then third, I would say the commercial one. The time zones, like Andrey said, who you're targeting, what are your clients? Look, I mean, in my aspect, from my view, I think brokers now, like I said, it all comes down at the end of the day to you're a business, right? A brokerage is a business. So for it to survive, looking at the acquisition costs and looking how the markets are looking. We're a very traditional broker. We pretty much had the most traditional brokerage you could find. It was very simplified. Here's your MT4, here's your MT5. We don't want anything to do with bonuses. We don't have anything to do with anything else in the beginning. But what we realized again, that we're offering everything to anyone is actually more beneficial, because people that are really experienced and educated in this field, they know how to differentiate what is good for them and what they're looking for. This is I have a big trust in clients in terms of what they're looking for in a brokerage that wants to implement these products. So I would say, when we looked at synthetics, we just said this passes all three of our tests that I mentioned before. It passes all three, and therefore we can give it out. So in short, that's what I would answer to you, China, once again, when it comes to that. I don't know if I can answer any more on that topic.
Thank you, George. Anyone else wants to add anything on this one? Good. I think we covered pretty much all the questions. Yeah. Thank you so much, everyone, for active participation, for all the beautiful questions from the audience, and of course to our beautiful speakers who shared their wisdom. It was very exciting for me to have this conversation with you guys today. Hopefully this is not the last time we talk about these things. As we always say, see you in 6 or 12 months, see how these things develop, how good liquidity on the weekend is, how wide the spreads are, what's happening with predictions, what's happening with synthetics. Maybe there will be another player in the market. Hopefully not. We'll see. We'll see what happens. This is a crazy world we live in, and always happy to catch up with all of you and discuss the things that are happening. And we will see you in the next episodes of the Roundtable. Thanks, everyone.
Thank you for the invitation once again. It was a pleasure, and thank you for the beautiful moderator. So everything was beautiful today.
Exactly. That was my favorite word for today. Thank you so much, everyone.
Thank you.
Have a lovely evening.
Cheers. Bye.